Hey traders, this is Danielle. I'm coming to you from downtown Austin today. As you can see, we've got the nice Capitol building in the background. Beautiful park. I just got done finishing a live TV segment with RTV America, and I was on the Boom Bust Network, so that was pretty cool, talking about the state of the markets overall. But let's go ahead and talk about this week. What happened? Well, the Fed raised interest rates a quarter point. Overall, that was to be expected, and honestly, it's a sign of a growing economy. The economy is incredibly strong. We have unemployment at historic lows. We have the GDP that's continuing to climb higher, and last quarter, corporate profits were up 25% year over year. So all in all, these are all signs that the economy is strong and it's going to continue to grow. What does that mean for us? Well, it means that I want to continue to trade to the long side. This week we saw a little bit of consolidation in the NASDAQ and the S&P. Dow was a little bit shaky and Russell pulled back, but to me that's just a buy point. Right now I'm still loading up positions in the NASDAQ for the daily squeeze, wanting to trade that to the long side into the next quarter's earnings dates, especially because last quarter showed such strong corporate profits. Traders are going to be piling into these names prior to Q3 earnings. What I want to do is I want to be along for that ride with options. So let's go ahead and look at the trades we put on last week and look at our charts and see where we can go from here.
All right, welcome to the chart segment of Simpler Playbook. So first we're just going to go over the market a little bit. As you can see, I mean, the market's traded rather sideways this week, right? So about 20% of the time the markets are moving higher. The rest of the time they're kind of consolidating. This was a week of consolidation, really. We're only up 2 points in the S&Ps right now, which is not large by any standard, and we're still holding above our key area of support that comes in right at about 2,900. So I continue to like the S&Ps to the upside. My next upside target is going to be about 2,960 or so. I think that with the markets consolidating this week, there was just a lot going on. There was the Fed decision. The Fed hiked rates a quarter point. That did not negatively impact the market as far as I can tell. There's also more tariff rhetoric coming out about Canada, and that as well has not had a negative impact on the market. So I continue to like the market to the upside. And the technicals suggest that that is the case as of right now. We still have a daily squeeze on the NASDAQ, and a lot of our NASDAQ names have continued to climb higher this week, despite the fact that this is in consolidation. You can see the stair step higher, and you can see the pause at the resistance level. I still like the NASDAQ into about 7,800, and remember, this is the beginning, really the run into earnings for most of the NASDAQ names. It's starting right now. So with that, what do? Well, we got to look at XLK, and we got to look at our primary tech names that have earnings about a month out. Okay, this is one of our main setups that we like to do. Why does it work? Well, it works because people want to own shares of stocks that they think are going to do well on their earnings date. So what happens is once this stuff starts hitting the news, oh, Microsoft earnings is coming up, you get a rally because there is buying coming into the earnings date. So what we try to do as options traders is we try to take advantage of that. So right now, really what we're doing in the options gold room is looking for tech stocks within the NASDAQ, because the NASDAQ's in a squeeze, because our tech stocks are really the strongest performers this year. And they get a lot of hype around their earnings dates. They're already in an uptrend. So those are typically the best ones to look for to try to play on really a 2 to 3 week basis in the options market to take advantage of these type of rallies. The other thing that we're looking for in this market are high short interest stocks. So what does that mean? Well, it means that a lot of people are betting against them, but those people are wrong. And when those people are wrong and when those people are losing money, they have to start getting out. And their getting out causes more buying. So here is a high short interest stock that I have on from the trading room, TDOC. Same thing, you know, upward trending pattern. You have a pullback here, you have a squeeze, and then boom, off she goes. So right now in this market for your playbook, I mean, the best thing to do is focus on high short interest stocks and focus on run into earnings within the NASDAQ. Let's go ahead and look at what the trades that I gave you last week on Cyber and CP. So Cyber, again, you know, 5-star setup. We had 5-star trending pattern right here. We had a squeeze that turned into a slingshot squeeze. If you're not familiar with the slingshot squeeze, make sure you check out the Pillars course. And you can see that it held this level of symmetry perfectly. So Cyber at this moment in time is headed right up into 80.18. That's your first target, and your secondary target is 82.50. So if you took this trade, those are your points that you'd look to take it off. The other trade that we recommended last week was CP. Now the railways have been doing well, even, you know, especially with all the tariff rhetoric, thus far at least. And, you know, we have a nice pattern here. This one also, we got a squeeze, ready, aim, fire, buy, boom, hit our 1272 extension, and that is our target, 213.49, and then 216 is the next target. So that trade is working out quite well. I would say that the squeeze hasn't even fired yet. So at this point, you know, you could still get into that. Now, let's talk about some new trades. PANW, of course, this is going to be in the NASDAQ tech space, and I like this one due to the overall pattern, especially because of the symmetry that we have. We also have a squeeze, and it's getting a little bit oversold. I think it could fall a little bit more before we get into this. You could try to start building a position right here on the 34 EMA with symmetry, but I think it might dip a little bit more before it triggers. So, you know, your points of validity really are, it depends where it holds, right? So if this level that it's on right now breaks, I will look for the last level. We do have a 15-minute moving average cross trigger, but I don't know if that's going to hold. If this 226 level breaks, then I would look for it to hold between 221 and 222 before we get a trigger. We're starting to get a ready, aim, fire trigger here, but I would really like the major trigger on the daily chart to tell me that it's really time to get into this thing. To trade it, what I would do is I would look at this earnings series right here, November, the 11th, November, and you can see that these are pretty expensive. So what you could do is you could make this into a spread. So in order to do that, you would have to go and see what your target is on the trade. And your target's going to be about 245. So you could look at a spread, something like this, doing a vertical 222 to 245, see if that helps. Looks like doesn't want to let you do that, so you could try 240. It's still $9.35, so that's still rather expensive. You could also just look at this and say, you know, I'm just going to sell a put credit spread on this and go for a 227.50 to 225 and make sure that's selling, not buying. There you go. And then you have a 1-to-1 risk reward situation on a trade for two contracts. You're only risking 276, 21 days out. That's a pretty conservative trade. I like that. It looks really good. So I actually favor that one for a move higher in PANW. The next one is going to be HQY. Now this is pretty highly ranked fundamentally via IBD. So I like it for that reason, but I also really like it just because of the overall pattern. So you can see that it has a really nice trending pattern. We have a nice pullback. We have a slingshot squeeze setting up, and we have a target at about 102.48. So for this one, I actually just like long calls on it. Either these Delta 50s or the Delta 77s. I would probably pick these, the deeper in the money, that will be about at the 90 strike. If you want to give yourself some more time, you can come out to here. Out of all of those options, this one is going to be my favorite right there because it is in the money. That'll allow you to kind of sit through the ups and downs of the market, and you have a lot more time. You have 49 days instead of 21 to pay up another $1 or $2 for that extra time is amazing. So I like that trade a lot. Again, you know, your target's about 102.5, and you would have to have your stop below the 50 period simple on that one. The next one that I like is a high short interest stock. So with this one, you're looking for the shorts to start covering, looking for the shorts to start covering when you get a break through this previous high at $50. So with this trade, you know, you can see that you have earnings coming up. I don't know that an El Dorado Resorts would particularly have the best run into earnings. Typically, you're looking for strong tech names. But, you know, it still could help with the daily squeeze. And I'm primarily looking at the squeeze here. You've got a squeeze here, you've got a squeeze here, and you can see the price action that happened last time, and that's exactly what I'm looking for. I'm looking for a breach of 50, and I'm looking to trade it into at least 52, if not 53 would be pretty good. So with something like that, you probably want to give it a little bit more time just because it's not a well-known name. So it could be a little bit slower. So I'd go out into 16 in November and pick up some long calls right about there. All right, so that is about it for playbook for this week. I mean, really, it's just about sticking where the strength is. Right now, our primary strength is within the NASDAQ, within XLK, and also within XLY. So that is really where I'm focused. We also have Costco earnings coming up. We have a daily squeeze in XLY, and Amazon, of course, has been incredibly strong, and Amazon has a run into earnings coming up as well. So make sure you check out all of those ideas. And yeah, thank you very much. Hope you enjoyed this video, and I'll see you in the next one. Good trading.